Clearly, everyone is looking at the same chart and the same candlesticks, but while one person might think, ah, that's a sell volume candle, or someone else might simply think, oh, that's a buy volume candle, and read the market flow in a straightforward way, while yet another person might see, it's a sell volume candle, but the buying force has absorbed it. Or they might make a completely different judgment and analysis thinking, it's a buy volume candle, but the selling force has overwhelmed it. The reason is that they're seeing the hidden data behind the candlesticks on the chart, something others can't see. By the way, how are you currently looking at charts and what method are you using to trade? Hello. There is a strategy that is being talked about a lot in the current trading market. It's called ICT. Many of you have probably heard of it. This strategy is known as a method for tracking the trading traces of institutional investors or large whales who move the charts. However, recently there have been numerous reports and evidence emerging that the creator of the ICT strategy was liquidated on 2 accounts during live trading and even manipulated results using Photoshop. These details are thoroughly documented on major trading communities including Reddit, the largest community in the US, as well as Trustpilot.com, BabyPips.com, ForexFactory.com, and ForexPeaceArmy.com. Did you know about this? All this time you have all been deceived. And I've also been following the ICT strategy for a long time, but there are some very critical structural flaws in this theory. However, the bigger problem is that many traders are completely unaware of these fundamental limitations. The ICT theory simply tells traders to look for fair value gaps and order blocks in the candlesticks. In the end, it claims that you can understand the movements of institutions and whales just by looking at candlestick patterns, but the truly ironic thing is that the account of the very creator of this strategy was liquidated. Moreover, companies famous for making indicators like FlexChart and LuxAlgo only focus on selling tools based on the ICT strategy, yet nowhere do they provide any data or backtest results that actually prove the effectiveness of the strategy. Simply looking at the shape of a candlestick and saying, this is a fair value gap, or this is an order block, is a very risky approach. The candlestick patterns that ICT talks about can be found countless times on any chart. You might end up trading while falling into confirmation bias, remembering only the patterns that work and forgetting the ones that don't. So is it really impossible to create a strategy or indicator that tracks the movements of institutions and whales? No. It is possible to create one, and I have already made one. Let's take a look at the chart for a moment. At the bottom, you can see the volume candles we're all very familiar with, and right below that, there's a slightly different type of volume candle being displayed. When we think of the volume candles we already know, we usually ask whether it was a buy candle or a sell candle, and whether it was a red volume candle or a green volume candle. That's the kind of form we're talking about, but if you look at the volume candles at the very bottom, you can see that even within a single volume candle, the colors are divided. Red represents selling pressure, while blue represents buying pressure. And if you hover your mouse cursor over the volume candle, you can also see the quantified buy and sell volumes for that particular candle displayed at the top. The very first step in finding the trading traces of institutions and whales began with the development of this indicator. It was necessary not just to judge the market flow based on candle patterns and shapes alone, but to uncover the real data hidden behind the candles. And I had to identify the methods and patterns by which institutions and large whales buy and sell, and I even completed the process of turning those into logic. Clearly, everyone is looking at the same chart and the same candles, but while one person might think, ah, this is a sell volume candle, or they might simply think, ah, this is a buy volume candle, and read the market flow in a straightforward way, while someone else might realize, ah, this is a sell volume candle, but the buying force has absorbed it. Or they might make a completely different judgment and analysis thinking, ah, this is a buy volume candle, but the selling force has absorbed it. The reason is that they're seeing something hidden behind the candles on the chart, data that others can't see. By the way, how are you currently looking at charts and what kind of trading approach are you using? The video content I showed you today is really just the beginning. From now on this channel, I will do my best to share with you technical and strategic elements and information related to trading and even options that you can immediately apply to your trading and charts. The hidden volume detector indicator that I introduced today is now available for all of you to use. If you need it, you can try it out right now through the link I left in the comments. It will be really helpful for you. If you're new to using TradingView or have any questions about how to use the indicator, feel free to leave a comment anytime. I will only be accepting all inquiries and questions through the comments. Thank you.